All right, diving right in, today we're taking a deep dive into M1 Finance, using all the articles and notes you sent us, by the way. So, M1 Finance, it's getting a lot of attention, right, for this whole pie system they have. And the whole automated investing thing seems to be their big selling point. What I'm seeing from your notes, you want to get a good grasp on how M1 works, all the important features, and then see how it could work for building a solid investment strategy, right?
Yeah, sounds about right.
Awesome. Well, to guide us through all that, we have our investing expert here. They really know their stuff when it comes to these platforms, how they work, and how to actually use them to make a plan. So, are you ready to unlock the potential of M1 Finance?
Absolutely.
I know I am. Okay, first things first, we got to unpack this pie concept. It seems to be at the heart of M1 Finance. And it sounds kind of delicious, right?
Well, it's more of a visual thing than an actual pie, but it's a clever way to look at your portfolio. Think of it like your whole investment strategy is a pie chart. And each slice of the pie, that's a stock or an ETF, and you get to decide how big each slice is, which means you're controlling how much of your money goes into each investment.
Oh, I see. So, like, if I'm really into, say, green energy, a big chunk of my pie could be in clean energy ETFs, and then maybe a slice of Tesla, just for fun.
Exactly.
And you mentioned fractional shares earlier, so that means I wouldn't need, like, thousands of dollars up front just to buy into those pricier stocks, right?
Yeah, exactly. That's one of the best things about M1 Finance. It makes it way easier to diversify, even if you're starting small.
Yeah.
And, you mentioned in your notes you're a little wary of trying to time the market.
Yeah, that always stresses me out.
With M1, you set your asset allocation, like how much you want in each slice of the pie, and then the platform just automatically invests your contributions using dollar cost averaging.
Okay, I've heard that term, but remind me, what's dollar cost averaging again?
It basically spreads out your purchases over time, so you're not dumping a lump sum in all at once when the market might be high. You're buying consistently, bit by bit, which usually gets you a better average price over time.
Oh, that makes sense. So it kind of takes the guesswork out of when should I buy?
Exactly.
I like
Yeah.
that. So with M1, it's kind of like setting my investments on autopilot, but I still have control over the main decisions.
Okay, you got it. It's hands-off but not blind. You're still choosing what goes in your pies in the first place.
Right.
M1 just handles the day-to-day stuff, like making those investments automatically, and even reinvesting any dividends you get so your money can grow and compound faster.
Okay, compounding, that's always good to hear. But how do we make sure we're building the right plan in the first place before we even get to the automatic part?
Right. So that all comes down to understanding two key things. Your financial goals and your risk tolerance. These are like the foundation of any good investment strategy. Before you even start building your pies on M1, you got to ask yourself, what am I actually investing for?
Makes sense.
Is it for retirement? A down payment on a house?
Mm-hmm.
Maybe something more exciting like early retirement to travel the world?
Oh, now you're talking. Early retirement travel, that sounds pretty nice.
Right. But the point is, each goal comes with different timelines and different levels of risk.
Okay, I see.
Someone saving for retirement decades from now, they have more time to ride out any dips in the market, so they can probably handle taking on a bit more risk.
Makes sense.
But someone saving for a house down payment in a few years, they might want to play it safer because they don't have as much time to make up for losses.
Right, right. So how much risk I'm comfortable with, that's really important too.
Absolutely.
And I think I read somewhere that M1 has like questionnaires to help figure out your risk tolerance.
They do, yeah. That can be a good starting point.
But okay, so let's say I know my goals, I know my risk tolerance. How does that actually translate into building those pies on the platform?
So with M1, you've got two main options, expert pies and custom pies.
Expert pies, custom pies.
Expert pies, those are like pre-made portfolios already put together for different goals and risk levels. They're a great place to start, especially if you're new to investing or you just want something simple.
So if I'm feeling a bit overwhelmed, maybe expert pies are the way to go.
Yeah, could be a good option. M1 offers a bunch of them, from conservative to aggressive, income-focused to growth-oriented, you name it. And you can see exactly what's in each pie before you invest, so you can make sure it aligns with your goals and risk level.
Okay, I like that. Transparency is always good. But what about if I'm, a bit more of a DIY investor? Like, I want to build my own portfolio from scratch.
You can definitely do that. That's where the custom pies come in. They give you full control. You pick the individual stocks, ETFs, whatever you want. You can even create pies within pies if you want to get really specific with your strategy.
Pies within pies. That sounds interesting.
Like, say, within your overall portfolio, you could have a separate tech pie with a bunch of tech stocks and ETFs.
Oh, I see, to focus on a particular sector.
Exactly.
So it's really flexible then, whether you're starting out or you've been investing for a while.
Yeah, they try to cater to everyone.
Cool, cool. But I know one of the big investing rules is diversification, right? How does M1 help with that?
That's a great question, and it's something we should definitely talk about more.
Let's do it. I'm all ears.
So diversification, it's all about not putting all your eggs in one basket, right? You want to spread your investments around into different asset classes. That way you're managing risk better.
Okay, yeah, that makes sense. So instead of just having my entire portfolio in stocks, I should aim for a mix, right? Like some bonds, maybe some real estate through REITs, even a little bit of commodities, perhaps.
You got it. Having that mix across different asset classes, it helps cushion your portfolio if the market gets bumpy.
Right, so if one area is down, another might be up, and it balances out a bit.
Exactly. And M1 actually takes it a step further. You can diversify even within each asset class.
Oh, interesting. How does that work?
So let's say a big part of your pie is in stocks. Within that stock slice, you could have stocks from different sectors like tech, healthcare, energy, financials, all sorts. You could even diversify geographically, some U.S. companies, some international companies.
Okay, I see. So spreading it out even more.
Yeah, the more spread out you are, the less likely it is that any single event is going to tank your whole portfolio.
Right, that makes sense.
And when it comes to picking those investments for your diversified pie, ETFs can be super helpful.
ETFs, yeah, those are like baskets of stocks or bonds, right?
Exactly. They track a specific market index or a sector. And M1 has a ton of different ETFs to choose from. Many of them are low cost, and they're already diversified within themselves, so it's an easy way to build a well-rounded portfolio.
That's good to know. I remember from your notes that you're interested in ESG investing. Are there ETFs for that too?
Oh, definitely. Lots of ETFs specifically focused on companies with strong environmental, social, and governance practices.
ESG.
You can easily add one of those to your pie if you want to align your investments with your values.
I like that, putting your money where your mouth is, so to speak. Okay, so ETFs, lots of options there. But with all these different asset classes and everything, how do I know what percentage of my pie should go to each one?
That's your asset allocation strategy. And it's honestly one of the biggest decisions you'll make when you're building your portfolio.
Okay, so no pressure then.
Well, there's a rule of thumb some people use. It's called the 110 minus your age rule.
110 minus my age? What's that?
You subtract your age from 110, and that's roughly the percentage you should have in stocks.
Oh, interesting.
So like if you're 30 years old, you do 110 minus 30, which is 80. So 80% of your portfolio would be in stocks, and the other 20% would be in things like bonds.
Okay, so if I'm 60, it would be flipped. More bonds than stocks.
Yeah, exactly. But, and this is important, that rule is just a starting point. Your actual asset allocation, it should always be based on your own personal situation. Your goals, your risk tolerance, all that stuff.
Right, because everyone's different.
Exactly. And the great thing about M1 is you can customize your asset allocation however you want. You can adjust those percentages anytime you need to as your life changes or your goals change.
So it's flexible, you're not locked in once you set it.
Not at all.
That's good to know. Okay, so let's say I've got my pies set up, my asset allocation is all figured out. What happens next? Do I just leave it alone and hope for the best?
That's actually the beauty of M1. Once you've got that plan in place, you can pretty much step back and let the platform do its thing. Automated deposits, dynamic rebalancing, dividend reinvestment, even things like tax loss harvesting, which I know you mentioned in your notes.
Oh yeah, tax loss harvesting. That sounded intriguing, but kind of complicated.
It's actually not too bad, especially with M1. Basically, it's a strategy to potentially lower your taxes by offsetting any capital gains with capital losses.
So like, if one investment loses money, I can use that loss to cancel out gains I made somewhere else.
Exactly. And that reduces the amount of taxes you have to pay on those gains.
Oh, that's clever, like making lemonade out of lemons.
Exactly. And M1, it can automatically find those tax loss harvesting opportunities for you and even make the trades.
Wow, that's pretty handy.
It really streamlines the whole process and can potentially save you some money come tax time.
Okay, tax loss harvesting, noted. But before we go too deep into taxes, let's get back to those other automated features you mentioned. Automated deposits, that seems pretty straightforward, right? Just setting up regular transfers into M1.
It is, yeah, but it's more than just automating the transfers themselves. It's about adopting a mindset of paying yourself first.
Paying yourself first. What do you mean by that?
It means treating your investments like any other essential expense.
Okay.
You're prioritizing them, making sure the money is going towards your goals before anything else.
I like that, putting your future self first.
Exactly. And this consistency, it ties back into that dollar cost averaging we talked about before. By investing a set amount regularly, you're smoothing out those market ups and downs. You're buying more when prices are low and less when prices are high, which usually leads to a better overall return in the long run.
So it's like taking the emotion out of it and just letting the system work for me.
Exactly. And that hands-off approach, it carries over to another key feature, dynamic rebalancing.
Dynamic rebalancing. All right, break that one down for me.
Basically, M1 is constantly watching your portfolio, and it makes little adjustments to make sure your asset allocation stays on target, even as the market moves around.
Oh, interesting.
So like, if your stock portion grows too big because the market went up, M1 will automatically sell some of those stocks and buy more bonds to bring it back into balance.
Okay, I see. It's like having a robot advisor constantly tweaking things behind the scenes.
Exactly. It keeps you on track without you having to lift a finger.
That's pretty cool. So I don't have to be glued to my screen checking my portfolio every day.
No, not at all. You can check in periodically, of course, like maybe once a year or if your goals change, just to make sure everything's still aligned.
Like a financial checkup.
Exactly. And remember, you're not alone in this. M1 has tons of resources and educational materials. Plus, there are other great financial tools out there that work really well with M1, like Personal Capital.
Oh yeah, Personal Capital. I was curious about that one. I liked that it can give you a big picture view of your whole financial situation.
It's fantastic for that. It connects all your accounts, your investments, your bank accounts, everything. So you can see everything in one place, your net worth, your cash flow, all that. It can even help you plan for retirement.
That's awesome, like having a personal finance dashboard.
Yeah.
But how does it connect with M1 specifically?
If you link your M1 account to Personal Capital, you get this complete picture of your finances. You can see how your M1 investments fit into your overall strategy, find areas to improve, track your progress towards your goals.
Okay, that integration sounds really useful. So it's not just about investing with M1, it's about managing your whole financial life.
Exactly.
This is all great, but I gotta ask, are there any downsides to M1? Any potential pitfalls to watch out for?
Well, no platform is perfect, of course. One thing to be mindful of, especially for new investors, is the temptation to overtrade.
I can see how that could be a problem. It's so easy to get caught up in the hype, checking your portfolio all the time, making impulsive decisions.
Exactly. And that kind of behavior, it usually ends up hurting your returns in the long run. Remember, M1 is designed for long-term automated strategies, not for trying to time the market or day trade.
Okay, so resist the urge to tinker with my pie all the time.
Exactly. Trust the process, stay consistent with your contributions, and let that compounding do its work.
Time in the market, not timing the market.
You got it.
All right, any other pitfalls to watch out for?
Another one is letting cash just sit in your M1 spend account for too long.
M1 spend, that's their checking account feature, right?
Yeah, it's great to have a high-yield checking account for your everyday spending and for your emergency fund, but you don't want to keep too much cash there because it's not really growing as much as it could be in the market.
Okay, so don't treat it like a regular savings account.
Right. Think of it more as a temporary holding place for your short-term needs. Once you've got a good emergency fund built up, any extra cash, move it into your investment pies so it can start working for you.
Got it. Make that money work harder. Okay, good to know. So M1, it seems pretty straightforward for the most part, but are there any more advanced strategies or features we haven't talked about that might be relevant to my goals?
Yeah, actually, while M1 is really beginner-friendly, it also has some tools and features that are more geared towards experienced investors.
Like what?
Well, for example, you could look into things like factor investing or sector rotation.
Ooh, those sound intense.
They are a bit more advanced, yeah. And they usually involve taking on more risk.
Okay, tell me more.
So factor investing, it's about targeting specific characteristics of stocks. Things like value, momentum, quality. These are factors that have historically tended to outperform the market.
So instead of just picking stocks based on companies I like or sectors I'm interested in, I'd be looking for stocks that have these specific traits that suggest they might do well.
Exactly. And luckily, there are ETFs designed for factor investing, so you don't have to figure it all out yourself.
Oh, okay. That makes it a bit easier.
But still, it's important to understand the risks before you jump in.
Gotcha. So factor investing, check. What about sector rotation? What's that all about?
Sector rotation is about trying to predict which sectors of the economy are going to do well at different points in the economic cycle. And then you adjust your portfolio accordingly.
Oh, interesting. So like if I think the tech sector is going to boom, I'd put more money into tech stocks. and maybe sell some of my holdings in, say, the energy sector.
Yeah, something like that. But again, it requires a lot of market knowledge, and it's pretty risky. Not something I'd recommend for beginners.
Right. Stick to the long-term plan. Don't try to get too fancy. I'm
Exactly.
sensing a theme here.
The key with M1, and with investing in general, is finding that balance between automation and informed decision-making.
Okay, so I can set it and forget it to some extent, but I still need to be aware of what's going on and make adjustments as needed.
Right. M1 handles the day-to-day stuff, so you can focus on the bigger picture.
I like that.
You're like the captain of your financial ship. You set the course, but you don't have to worry about steering every second.
Love that analogy. Captain of my own ship. I can get behind that.
Yeah.
But even with a great platform like M1, investing can still be challenging, right? There's a lot to learn, and the market can be unpredictable.
Absolutely. There's always going to be new things to learn, new challenges to face, but that's part of what makes it so interesting.
True, you never stop learning.
It's a continuous journey, of learning, adapting, and growing.
I like that perspective.
And remember, you don't have to figure it all out on your own. There are so many resources out there to help you stay informed. Websites, blogs, podcasts, even just talking to other people who are investing.
Oh yeah, the community aspect. I hadn't thought about that.
It can be really helpful to connect with others who are on the same journey, share knowledge, ask questions, learn from each other's experiences.
That makes sense. But even with all the resources available, it can still feel overwhelming sometimes.
I get it. It's a lot to take in, especially when you're just starting out.
Any advice for someone who's feeling that way?
I would say start small and focus on building a solid foundation. Don't try to do everything at once or chase after the latest hot stock tip.
So slow and steady wins the race.
Exactly. Take your time, educate yourself, and build your portfolio gradually, based on your own goals and your own risk tolerance.
Okay, I can do that. But what about those of us who are a bit more, hands-on with our finances? Is there room for that with M1, or is it strictly a passive approach?
That's a good question, and it actually brings up an important point about M1. While it's known for being automated and easy to use, it also offers a lot of flexibility for people who want to be more active in managing their investments.
Oh, really? I thought it was just for passive investing.
That's a common misconception. Yes, M1 excels at automation, but it also gives you the tools to customize your strategy and make adjustments whenever you want.
So it's about finding that balance, right, between automation and active involvement.
Exactly. You can tailor it to your own preferences and comfort level.
I like that. Options are always good. So M1 really does cater to a wide range of investors then.
It does. That's one of the things that makes it such a great platform.
Awesome. Well, this has been incredibly helpful. I feel like I have a much better understanding of how M1 works and how it could help me reach my goals. But before we wrap things up, I have one final question. We've talked a lot about the technical side of M1, but what about the bigger picture? How does this platform fit into the whole idea of personal finance and financial well-being?
That's a great question to end on. M1, at its heart, is more than just an investment platform. It's about giving people the power to take control of their financial future.
I like that, taking ownership.
And that's something I'm really passionate about. Financial well-being, it's not just about how much money you have. It's about having the freedom to do the things you love, to live a life that's aligned with your values, and to create a secure and fulfilling future for yourself and your family.
That's beautifully said. And it seems like M1, with its focus on automation, accessibility, and personalization, it can play a big role in helping people achieve that.
Absolutely. It breaks down those barriers to entry, makes investing less intimidating, and gives people the tools they need to make smart decisions.
Empowering people to take charge. I like that.
Yeah, that's what it's all about.
Yeah. Well, this has been fantastic. I think it's time to move on to our final thoughts and wrap up this deep dive into M1 Finance. Okay, so we've covered a lot with M1 Finance today. From those pies and fractional shares to all the automated stuff and how important it is to match your investments with your own goals and risk tolerance. What stands out to you as the most interesting thing about M1?
For me, I think it's how they managed to combine all these really sophisticated features with a platform that's super easy to use. It's like they make investing accessible to pretty much anyone, whether you're a total beginner or you've been doing this for years. And that focus on automation, it really helps take the stress out of investing, which is something a lot of people struggle with.
Yeah, that makes sense. It's so easy to get caught up in the day-to-day market drama and end up making emotional decisions that, probably aren't the best for your portfolio in the long run.
Exactly. M1 encourages you to think long-term, to make a plan and stick with it. So you can spend less time worrying about every little market wiggle and more time focusing on the things that actually matter.
like actually living your life.
Exactly.
This has been super helpful. I feel way more confident about investing now, but I'm also curious about, like, what do you think the future holds for M1? Any predictions?
Well, I think they're going to keep innovating, that's for sure.
Yeah.
I wouldn't be surprised if they expand even more into the personal finance space.
Yeah.
They already have that checking account feature, M1 Spend, and the borrowing option, M1 Borrow. So maybe they'll add even more features that help people manage their entire financial lives, not just their investment.
Yeah. It seems like those lines are getting blurrier these days between investing, budgeting, banking. It's all kind of blending together.
It is, and technology is making it all so much easier to manage. I think we're moving towards a future where personal finance is, well, actually enjoyable.
Enjoyable finances. Now that's a concept. But seriously, I think that's a really great point. M1, it's not just about making money. It's about giving people the tools to build a better financial future for themselves.
Exactly.
All right, well, that brings us to the end of our deep dive into M1 Finance. Thanks so much for joining us, everyone. We hope you learned a thing or two.
And remember, your financial journey is your own. Be patient, keep learning, and don't be afraid to ask for help along the way.
Great advice. Until next time, happy investing.